Stay informed on earnings trends and analysis in Zacks Earnings Outlook.
And we're going to do that now with our research director, Shiraz Mian, who's our go-to person here when we want to talk about the big picture of earnings. Shiraz, we're sitting here talking on January the 29th is when we're recording this. And just yesterday, on January the 28th, you wrote that the Apple earnings essentially are a game changer to the Q4 earnings season. So does this mean that Q4 earnings growth, that whole picture gets better now?
It is, and the way it is a game changer is that the growth picture that we were looking at for Q4 before the Apple release and after the Apple release were materially different. And I have a chart to share with viewers here. This gives the comparison of the before and after. But before I explain what's in this chart, I want to give a brief overview of the scorecard as of this morning. We have 197 S&P 500 companies have reported results.
Okay.
That's a little over half of the total market cap for the index. 5.9% is the earnings growth rates on 2.1% revenue growth. So in the 2.6% are beating earnings, and 46.7% are beating revenues. It's a mixed picture when compared to what these same 197 companies had reported in the prior quarters. But if I go back to that Apple story, you would see that the left-hand side chart is the composite picture.
Okay.
It includes Apple, so it's the 197 companies, including Apple, 5.9% earnings growth and 2.1% revenue growth. You could see that it's better, particularly the earnings growth is better than what these same companies had reported in Q3, and kind of comparable to the 4-quarter average. But take Apple out of the equation, and you see that the picture is totally different, and that's what we are showing on the right side. You see that the growth rate drops to 2.8% from 5.9%, and the revenue growth rate drops from 2.1 to 0.7%. So the picture is totally different when you look at the numbers with or without Apple.
All right, so if we take a look at the picture with Apple, as it stands, if the earnings picture for Q4 is brighter, does that mean that earnings this time around are going to help the market move higher?
Well, if you close your eyes to the fact that the growth is coming from just one member of the index, then yes, you could hope for that. But as our analysis shows here, it's very hard to hide from the fact that the growth is very concentrated. It's coming from just one member of the index. So yes, the aggregate growth picture is starting to look a lot better than what we were seeing at the beginning of the earnings season. But the fact remains that this growth is just from one company. It's a one-trick pony.
So how, with that in mind, how might you expect this whole picture to change once the energy companies begin reporting?
You know, I'm not expecting a big change in the picture because estimates for this quarter, for Q4, had fallen quite a bit before the earnings season got underway. Let me see the. I'm showing the different one, but what we had was that at the beginning of the quarter, we were expecting earnings growth for the energy sector in the S&P 500 to be up 7%. That has dropped now to a decline of almost 23%. So I don't expect the energy sector to be a further drag on the Q4 growth picture, though commentary from the energy companies on their capital expenditure plans and what they see the oil market doing will have a bearing on how estimates for the current quarter and for the second quarter of 2015 will evolve.
Let's talk about 2015 estimates for just a moment. you look for them to fall even further as you've got a stronger U.S. dollar here, slowing global economy, as all of that gets factored in?
Absolutely. And I brought in this this chart to share with you guys. You could see that even though we haven't reached the halfway point for the Q4 earnings season, the estimates for the current quarter as well as the following quarter have come down real sharp. And what this chart is showing, the green bars are the estimates for the current quarter, meaning the first quarter of 2015. The orange one is the following quarter, meaning the second quarter of 2015. And as you could see, at the beginning of October, the growth rates were 10.8% for Q1, 7.4% for Q2. As of this morning, Q1 growth is a decline of 0.5%. Q2 growth is a decline of minus 2.2%. So very sharp negative revisions for the first half of 2015. In fact, pretty much all the growth that was expected in the first half of 2015 has evaporated, and the reasons were the ones you cited. It's oil, it's the strong dollar, it's the global growth concerns, and all of that is showing up in this negative revisions picture.
All right, let's try to bottom line it here for our viewers. Having said all of this, will the Q4 earnings give us a clearer picture of company fundamentals and whether companies can grow in this current environment?
I think yes. I think yes. In all that we are seeing here in the data as of this point is the ground reality of what corporate America is producing on the earnings front. It's a lot of earnings. When you look at the aggregate totals, they are close to record levels. The question is, with respect to growth, where will the growth come from? The U.S. economy is doing reasonably good, but there are questions about Europe. There's question about the emerging markets. Japan and all the other developed markets are not doing as good. So if you don't have that growth support from outside of the U.S., then it's hard to expect earnings to come through. And if earnings are not going to grow, then it's hard to expect the stock market to keep going up.
Yeah, okay, thanks for all of that. We'll check in with you again during the remainder of earnings season. In the meantime, as earnings season progresses, and if you're not at our website, Zacks.com, get on over there because Shiraz has written commentary on the aggregate earnings picture as well. His earnings trends commentary, his daily comments in his Ahead of Wall Street column that appears daily every morning, bright and early on the website. And again, if you're not on the website, keep an eye to the video section of the website because in the coming weeks, you're going to see a couple of new earnings video segments that Shiraz is going to be hosting. All of that for you on Zacks.com with Shiraz. I'm Terry Ruffalo.